Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dekon Food and Agriculture Group Annual Report. Dekon Food and Agriculture Group offers a diverse range of businesses and services in the food and agriculture industry. At its core, the company specializes in livestock and poultry breeding and farming, operating through three primary segments: pig, poultry, and ancillary products. The pig segment involves the production and sale of market hogs, breeding pigs, market piglets, and boar semen. This comprehensive approach enables Dekon to cater to various needs within the industry, from raw materials to high-quality breeding stock. In addition to its livestock operations, Dekon also focuses on poultry farming through its poultry segment. The company produces yellow-feathered broilers and chicks, providing a reliable source of protein for consumers worldwide. The ancillary products segment further expands Dekon's offerings by including feed ingredients, fresh meat, and other related products. This diversified portfolio enables the company to provide a one-stop solution for customers in the food and agriculture industry, making it a significant player in the market. Dekon Food and Agriculture Group market capitalization of $30 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Dekon Food and Agriculture Group holds a significant advantage in their industry. Dekon Food and Agriculture Group trades at a higher price-to-earnings ratio of 7 times and a higher price-to-book ratio of 2.87 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 63% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors that have impacted sales, volume, and average selling prices across various segments. Market hogs have been a significant driver of revenue growth, with a 14.5% increase in sales volume and a substantial contribution to overall revenue. The pig segment has also seen a notable increase in sales volume, albeit accompanied by a decline in the average selling price of commercial pigs. However, cost reduction initiatives have helped mitigate this effect. On the other hand, the poultry segment has experienced a decline in revenue due to an industry supply-demand imbalance and low product prices, resulting in a 10.6% year-on-year decrease. The average selling price of market hogs has also decreased by 17.7%, further contributing to the decline in revenue. In contrast, other segments have shown growth, including internal sales to slaughterhouses, investment income, and ancillary products segment, which has seen a significant increase in revenue driven by the slaughtering business. Overall, these factors highlight the importance of market dynamics, pricing strategies, and operational efficiency in driving revenue growth or decline. The net income of the company decreased significantly from RMB 3,268,927 to RMB 1,421,611 between 2024 and 2025. This represents a substantial drop of RMB 846,315,424.37 in net income. The profit margins also declined during this period. The gross profit margin dropped by 9.3% from 23% in 2024 to 13.7% in 2025. The operating profit margin decreased from 14.9% in 2024 to 6.3% in 2025, while the net profit margin fell from 14.6% in 2024 to 8.7% in 2025. The main reasons for this decline are attributed to oversupply and low prices in the market, leading to a decrease in net income. Additionally, the average selling price of market hogs and broilers decreased by 17.7% and 12.2%, respectively, contributing to lower profit margins. Furthermore, an increase in cost of sales due to higher sales volume also contributed to the decline in profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided data, the net cash generated from operating activities is RM 530.7 million, which surpasses the EBITDA of RM 513.7 million. This significant difference suggests that the company is not only generating substantial earnings, but also efficiently converting those earnings into cash flow. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent times. On the one hand, the total debt has decreased from RMB 4,286 million to RMB 3,451 million, indicating a reduction of RMB 835 million. This decrease is largely due to a drop in short-term borrowings by $619 million. However, this reduction is somewhat offset by an increase in long-term borrowings by $691 billion. Nevertheless, the overall effect has been a decrease in total debt. On the other hand, interest expenses have also seen a significant change. The interest expense on borrowings decreased by RM 121 million, while net interest expense dropped by RM 123.7 billion. These changes indicate that the company's financial situation is becoming more manageable, with lower debt levels and reduced interest expenses. This could be a positive sign for investors and stakeholders, suggesting that the company is taking steps to improve its financial health. Management is emphasizing the importance of adopting a lean operations approach, prioritizing quality above all else. This involves aggressive cost reduction, business model innovation, technological advancements, and collaboration with other companies to ensure stable operations and sustainable growth. To achieve this goal, the company plans to focus on high-value market segments through product differentiation and value-added services. Additionally, they aim to optimize their product portfolios, enhance capacity utilization, and accelerate the construction of a closed-loop industry chain. This strategic approach is expected to drive business success and long-term sustainability. The pig and poultry business has been particularly successful due to favorable government policies, but management's overall strategy remains focused on innovation, efficiency, and collaboration. By prioritizing these key areas, the company aims to maintain its competitive edge in a rapidly changing market. The company has a history of paying dividends to its shareholders. In fact, in 2024, each share was entitled to a dividend payment of 0.9 RMB. However, this trend did not continue into 2025, as the company chose not to pay dividends that year. In terms of share buybacks, there is no evidence to suggest that the company has engaged in such activities. Despite having access to relevant information on page 34, there are no records or indications of share repurchases. There are concerns about inventory buildup in the industry. This issue has been identified as a significant problem, with evidence pointing to its existence on page 14 of the report. However, there is no direct concern about supply chain disruption. While it is acknowledged that global supply chains can impact feed prices and raw material price volatility, this risk is not considered a major threat at present. That concludes the financial summary for Dekon Food and Agriculture Group. Feel free to comment below, and I will be happy to answer them when possible.